Hello, everyone. Matt Clark, research analyst for Money and Markets here with your weekly marijuana market update. But before I get into this week's update, I do want to tell you about Chief Investment Strategist Adam Odell's Millionaire Masterclass. He unveils a strategy he's used in the market to retire at the age of 33. And like I said before, I'm not 33, and I certainly wish I would have known this strategy, because in my retirement portfolio, it would probably be a lot better off than it is right now. Just head over to www.theinvestingsecret.com to find out more about this fantastic trading strategy. Make sure you do that after the video. Again, that's www.theinvestingsecret.com. It's one I use. I use a strategy for cannabis stocks, things like that. We'll talk about our cannabis portfolio or our cannabis watch list rather here in just a bit. But now I want to get into this week's update. Today, I'm going to revisit a cannabis stock I've talked about in the past. Sam Baldwin on YouTube wrote, please do another one on Aphria after the SweetWater acquisition and the MORE deal, the MORE deal. It has a bit of momentum. Love your videos. Really informative. Well, Sam, first, thank you for watching, and I would be more than happy to provide you with an update. When I first covered Aphria Incorporated, it trades on the New York Stock Exchange under APHA. I was pretty bearish on the stock. Its technical and fundamental data just really didn't support any reason to buy into the stock at that time. But times, like the market, do change. As you can look at this chart here that I'm showing you, you can see that Aphria has made quite a run since November. The orange line on the chart is Aphria stock, and the green line is the Spinnaker Cannabis ETF, which trades on the New York Stock Exchange under THCX. It's an exchange-traded fund that tracks cannabis stocks. So I kind of use that as a bit of a benchmark to see kind of how individual cannabis stocks are doing. There's a couple others that you can use, but they all perform about the same. So I just chose this one just as a reference point. Now, this chart here shows Aphria's Canadian holding on the Toronto Stock Exchange, but its American counterpart on the New York Stock Exchange has moved relatively similarly. Aphria is up about 66% on the New York Stock Exchange since 2020. It's up 58% in Canada. Now, the difference here is actually pretty telling. Since June of 2020, Aphria shares have gained 58% in value in Canada, 66% in the United States. And most of that has been occurring since the 1st of November. THCX, on the other hand, has only moved about 12.8% in the same time. So it's a pretty wide difference between the amount of gains for Aphria and the amount of gains for a cannabis ETF. It means Aphria stock is outperforming the ETF that tracks the cannabis market, and Aphria is outperforming the broader cannabis market. What's more is that Aphria is also outperforming its American industry, which is agriculture. The broader agriculture industry has gained around 30% since June of 2020, while Aphria has doubled those gains in the same time. The big question here that people have is, why has Aphria gained so much so fast? Well, that's a good question. The outcome of the U.S. presidential election certainly didn't hurt. Politics aside, ushering in a Democratic president with a Democratic-controlled House and the potential for a Democratic-controlled Senate bodes well for the potential for federal legalization of cannabis. In fact, the U.S. House of Representatives voted last week to approve the Marijuana Opportunity, Reinvestment, and Expungement Act. That's the MORE Act. The act would decriminalize cannabis on the federal level and expunge nonviolent federal marijuana convictions. Despite a recent Gallup poll that showed 68% of Americans were actually in favor of legalizing cannabis, the bill is pretty much dead on arrival in the Republican-controlled Senate. In fact, I doubt it even gets assigned to a committee for a hearing. However, the vote is rather symbolic. I've said this before. It shows the incoming Biden administration that there is support for federal cannabis legalization in Congress. Where that goes, however, is a different story. Perhaps even bigger for Aphria, on the other hand, was the November 4th announcement that Aphria is dropping $300 million to acquire Georgia-based independent craft beer manufacturer SweetWater Brewing Company. This is a $250 million cash deal, followed up with a $50 million stock deal, so it makes it $300 million. For the $300 million, Aphria gained instant access to the larger U.S. market as SweetWater distributes its craft beer in 27 states and the District of Columbia. This is actually a really good partnership as SweetWater develops and sells its flagship 420 beverages that are, as Aphria put it, closely aligned with a cannabis lifestyle. This is basically a craft beer that's meant to resemble a taste of cannabis. I haven't had it. I've seen it. They do sell it here in South Florida. It doesn't have actual cannabis in it because that would be illegal here in Florida, but it is supposed to kind of mirror a cannabis taste. But it is a flagship, and it does sell very well. Aphria, like I said, financed the deal with available cash on hand and proceeds from a recent equity program. They basically sold more stock to get more equity. thus using that money to make this acquisition. The bigger question here is whether Aphria has a staying power to continue its upward trajectory. Several analysts seem to think so. Cantor Fitzgerald, Haywood Securities, Morningstar, PI Financial, they've all set high price targets for Aphria that are well above its current price now, both in the Canadian and the American markets. However, using our 6-factor green zone rating system, Aphria still ranks a 40 overall, meaning that we're still pretty bearish on the stock and don't necessarily see it outperforming the broader market. It does have solid momentum, but its quality and growth metrics are all relatively low. In fact, they score in the 20s and in the 30s, respectively. But does that mean it's not a buy? Well, right now, I don't think so. I do believe there is some room to grow here, but I don't think it's very much. If you were to get into Aphria today, I would suggest probably a stop loss between $6.75 and $7 per share because the stock remains fairly volatile. That would equal a maximum loss of about 18% if you're comfortable with that. Again, I stress, if you're comfortable with that. If you're not comfortable with that, then you can always set those stop losses a little higher. On the high side, I would probably set a profit target of around $10.50. That's looking at a maximum gain of about 27%. Setting those limits give you a good exit point for either a loss or a profit. Doesn't force you to sit on a loss for too long or stretch out a gain that may not happen. I'm still a little hesitant on Aphria just because of its past performance. I like to look at long-standing historical data, and holding rallies this long is not something Aphria is known for. The deal with SweetWater is a good one, but I can see the gains from the announcement fizzling out just as fast as the upward movement of the stock happened. The bottom line here is you need to exercise caution. Aphria has a good run, and it's okay to think that run up has maybe reached its end, meaning you might want to continue to stay away from the stock. Does that mean you have to? No. But if you do get in, make sure you're spending no more than you are willing to lose, because those gains, like any other gains in the market, are not guaranteed. They may not last very long. You may get a nice little surge up over the next couple of weeks, but that's probably going to be about it. So that's my take on Aphria. Now, let me update you on our cannabis watch list. The watch list, as it has been the last several weeks, has really been on fire of late. 4 of our 5 positions are now actually showing double-digit gains since I put them on the watch list. The watch list cumulative gains are around 20%. Those gains blast past the broader market. The iShares Core S&P 500 ETF, which trades as IVV on the New York Stock Exchange, is only at 4.6% since I put the first 3 cannabis stocks on our watch list. Here's a deeper look at that watch list. SweetWater International trades on the New York Stock Exchange under SWM, is a traditional tobacco company. It's been consistently in the black since I put it on the watch list in September. It's currently showing a 17% gain since then. Perkin-Elmer Incorporated trades on the New York Stock Exchange under PKI. It's a company that tests cannabis strains and has also been a consistent winner since I added it in September. JP Morgan Chase & Company recently increased its stake in PKI, so that actually bodes well, as now you're seeing more traditional investors starting to pile more capital into these stocks. The stock is up more than 20% since I added it in September. Turning Point Brands Incorporated trades on the New York Stock Exchange under TPB. This is another traditional tobacco company making its run in the cannabis market. Turning Point has been our best performer thus far on the watch list. It's up nearly 37% since I put it on the list in October. Grow Generation Corporation trades on the NASDAQ under GRWG as a cannabis company and is selling more stock in hopes of raising an additional $125 million in public money, which is good because they're actually trying to find more capital, likely for more research and development or for potential acquisition targets. Since I added it to the watch list in November, it's up more than 23% and still has room to grow. Then there's Scott's Miracle-Gro, which trades on the New York Stock Exchange under SMG. This has been our weakest performer thanks to an early snow in the north and some different weather conditions. People just aren't fertilizing their lawns nearly as much as they used to. Despite being down as much as 10% back in early October, the stock has rebounded and is now up 2%. It may not seem like much, but when you go from a 10% drop to a 2% gain, that's a 12% change. That's actually not bad. If you invested when I made those recommendations, congratulations on your gains. Remember, the email address to send comments, any questions, or stocks that you'd like me to take a look at is feedback@moneyandmarkets.com. If you're interested in listening to the Marijuana Market Update before anyone else, make sure that you are subscribed to our YouTube channel. Just click the subscribe button, and then when the notification bell hits, make sure you click on that as well so that you are updated each and every time we premiere a new video. Make sure to subscribe. The same goes for the Bull and the Bear podcast and our week ahead videos. Any other videos we put out are the same the same way. Coming up for the rest of this week, we'll have much more on the Bull and the Bear podcast, our money markets week ahead, and much more. So stay tuned. Also, I'd be remiss if I didn't tell you to check out moneymarkets.com for every day for new content, provide safe and profitable investment information for you. Make sure you sign up for our email for our free daily e-letter. Just go to moneymarkets.com, give us your email address, and we'll send you a daily e-letter that contains 2 to 3 stories every day, and to provide you safe information for your investment portfolio. They come from myself, they come from Charles Sizemore, they come from Adam O'Dell, Michael Carr, and others as well. So don't forget to do that. I'm Matt Clark. I'm research analyst for Money and Markets, the host of the Bull and the Bear podcast. Until next time, everyone, safe trading.